Woolworths is a combination of a food and clothing retailer targeting well-off customers. It recently acquired David Jones in Australia and concluded a substantial rights offer at R59.50. It has a market cap of R88.7 billion, a PE ratio of 26.9 and a dividend yield of 2.5%. Now that PE ratio obviously sounds expensive, especially when you're comparing it to ShopRite, which we said was expensive, but not as expensive as Woolworths. But there are lots of moving parts in there. We're going to see those David Jones numbers start coming through. And I know we were discussing off air earlier that we actually saw a David Jones and Country Road report coming out from Woolworths, which looked pretty positive.
Yeah, very, very positive. I think, buying Woolies at this stage, it's all about that David Jones acquisition. I mean, it was an enormous purchase for them, and it's all going to be about how they extract synergies, as they keep saying in the report. I mean, they're saying, you should see most of that feed through into earnings by 2017. So you've got a nice period of, I think, elevated earnings coming through, they're trying to unlock. I mean, I think by, like you said earlier, almost moving, Woolies brands into the David Jones locations. They're going to try and unlock about 130 million Australian dollars worth of extra value. So that's the big kicker for them. I mean, obviously their target is to become the biggest. I think they are now the biggest retailer in the Southern Hemisphere. I mean, that gives them about a billion customers to go after. So I think out of everyone, it's the real heavyweight in the sector. I mean, its market cap sitting at around the same as ShopRite, as the other big one, but their exposure now in Australia rather than into Africa, I think is probably a more exciting prospect for me.
And I think it's very much a clothing story. I mean, as South Africans, we know Woolworths for their great groceries and, making everyone a good cook because everything's peeled and sorted for you already. But Ian Moore comes from a clothing background. He was running Country Road in Australia, and that's where he's focusing his big growth. And I agree with him because the margins are better. It seems to be slightly easier because you don't have to keep everything fresh and that's very complicated, that grocery kind of world. The acquisition was obviously risky because it was massive in the biggest scheme of things for Woolworths. Did you back the acquisition? And going forward, now that you've seen this report, do you think they're going in the right direction clothing-wise compared to groceries?
Yeah, I think. I mean, we did back Woolies all the way through. We've backed Woolies for the last 3 years very, very successfully. So, I mean, it's outperformed all the other retailers over 5 years, and I think it's over 300% over 5 years. So, I mean, we're very happy with Woolies. We still invested. We still think it's going to get above 100 Rand a share. So
if you followed your rights at 59.50, you're very chuffed.
We are very, very happy. Yeah. Yes. Looking at it, remember you've got that. You mentioned the clothing and the food. I mean, that's always the dynamic in something like Woolies. The food is the stable, non-cyclical portion of the business. The clothing is the highly cyclical. You miss a fashion range or something like that, and the earnings are very, very volatile. Like you said, the margins are much bigger, but it's far riskier business as well. Also Ian Moore, like you say, I mean, he's got a good backing. But if you look at the most recent results, I mean, the food, the South African foods especially, was really where it was standing out. I mean, Country Road, it was hampering them a little bit. I mean, they need to sort of get that business going, the Country Road, the Witchery as well.
Because with the grocers, they did a huge price increase and everyone just seemed to absorb it and be like, okay, I'm going to pay an extra 15 Rand for my pre-peel buttonnuts,
Exactly,
but I think what their team has done incredibly well and what Ian Moore always focuses on is the retail experience. You walk into a Woolworths, all the staff are friendly and happy. You'd imagine they get treated very well. You feel like you've come home. The whole design of the store is great. And I think that's what they're going to focus on in terms of David Jones. And that's why I believe they'll be able to turn that business around because it was a business that was struggling. Are you hot on Woolworths?
You got to be hot on Woolworths. You have to be hot. We've backed it for 5 years. We're still very happy with it. Looking at it forward, when you see that whole unwind and the synergies, if they come through on David Jones, which I think is the big risk, is the execution risk on turning around David Jones. I mean, you're looking at probably a 2-year forward of sort of 14, 15 PE on Woolies. So we actually think even at these levels, it's still cheap. It's by far the cheapest of the retailers. We also think it has the best management team. You've got to be hot.
Have you entered to go to the Pharrell Williams concert and they're doing the promotion for?
I'll try and get tickets.
You probably
please.
have by swiping. You don't even know you have. Yeah. Okay, I'm also hot on Woolworths. I agree with you. I think it's a great, innovative business and definitely back Ian Moore and his team.